seasoned investors, experienced investors that are willing to take their time out of their day and just have a coffee with a couple of you, and just you can just pick their brains on whatever questions you want to ask them. So it's really, really, really cool. And of course, we'll be doing in a safe, socially distanced manner. So anyway, keep watching your emails and check the calendar. And other than that, have a happy Turkey Day.
Oh, got anything, Jack?
Thank you guys.
Nope.
So let's learn a little bit about Richie.
Yeah.
All right, Richie, you are up. Go right ahead. Oh, wait, I'm sorry, guys. I forgot to get him to unmute. I'm sorry, Richie. Give me 1 second.
And go.
Okay, can you hear me?
We can hear you now.
So this is my first time turning the video on, Kathy, and my reward is I get picked as
Finally, we keep
no good
seeing
deed goes
you
unpunished.
name.
Okay, so hi, my name is Richie Shacker, and I have been a TREIA member off and on for about 14 years. I was out for a while, but I've been back on since at least 2014. Why did I join TREIA? To learn more about real estate investing, to network with other investors, and to become a better real estate investor myself. I do have a full-time day job, and that's in software development with a large technology company in the Triangle. And so, you know, my thing is I don't want to kill the goose that lays the golden egg. So real estate is a side hustle for me right now. Even though I'd love to do it full time, eventually I would have to find a way to replace, you know, my current income. And I'm happy with what I do. I like my job and like the people I work with. My investing is with single family homes and rentals, and I'm working on what I call the get rich slow scheme. And so I have 3 high quality properties with high quality tenants, and they've been appreciating. I don't get much cash flow, but the appreciation is building long-term wealth, and has probably overwhelmed any kind of return that I would have gotten from cash flow. So I'm hoping to expand that portfolio as time goes on, but do it at a measured pace where I never get overextended. What is my favorite thing about TREIA? Well, it's the people, of course. And can't wait till we can get back together and be face to face again. And the food is pretty good too, and the speakers. Anything else I'd like to say? Well, no, I'm just happy to be here, and it's a lot of fun. You know, real estate investing can be very rewarding, and there's lots of different ways to skin that cat. You know, I've learned so many different ways that people make money, and there's no right or wrong way to do it. It's all about, well, what fits your style and what fits, you know, your approach to things, and how much time you have and what your objectives are, and so on. That's about it.
Well, thank you so much for sharing with us. And now that we know you're in IT, you should know that we are always looking for IT volunteers. So you got yourself in all kinds of trouble tonight, buddy.
I know. We might be picking your brain.
Well, I just need more time, but I promise you, when I semi-retire, then I'll be looking for a position on the board someday.
We'll hold you to it. And for those of you,
we have it recorded. So
for those of you who are sitting here saying, what is he talking about? The food is good. Yes, if you're a new member, lo and behold, when we meet in person, we do have food at our meetings, and it's pretty good. So thanks again, Richie. Roxana, take it away, baby doll.
Yes. Hello, you guys, kings and queens. Good evening. Good evening. Thank you guys for tuning in on our meeting tonight. We are excited and thrilled to have you here. We want to make sure that you guys are very engaging with us. We are pretty laid back, so don't feel like you're too far from us. Just like Catherine said, in-person meetings, we have really good food, and then you can also see how open we are. And you guys definitely want to take advantage of all of these different opportunities that is showing you for us in being creative, for us in getting these deals, because we are moving into a new cycle when it comes to this real estate. But on tonight, what's good about this is, I know you guys heard about funding, and I know you probably Google it. And then some of you guys probably already a homeowner yourself. So you at least heard the word FHA, VA, and then maybe even conventional, and maybe, you know, USDA, who knows? The truth is there's so many loan options out here when it comes to real estate investing. And we're just gonna talk about a little bit on what's the requirement for us in getting funding, because sometimes it's not just a loan, there's other creative ways to also get funding. And it's good to understand what is it that the underwriters are actually looking for and why it's taking them so long. Why are we getting some of our deals denied because we say that we're not a cash buyer? Simply it's because the underwriters just say it's taking forever, and they don't want us to delay the closing. So that's why they only want to deal with cash buyer. But once you already have your processes in place, you can do certain deals that doesn't have a quick turnaround time that you might can do anywhere between 20 to 45 days. So it's very good to understand about these different loan types and what is it that they're looking for. So be open. Definitely ask as many questions as you can. His name is Raymond. This is a guy that is not new to this. He have well over 20 years experience dealing with funding. He have been funding different businesses throughout even this year with a lot of success doing it. So he definitely know what's going on with the new underwriters decisions on getting things approval, because there's a lot of things that's actually changing. So definitely ask questions, you guys, be open. Just like Catherine also said, make sure you join the group on Facebook. I see a lot of you guys up there, you active, sometimes you in, sometimes you out, but just know that we are up there and you can ask questions. This is one of the less costly ways that you can learn how to invest. It's right here in your local TREIA meeting. So thank you guys again for tuning in. If you get sleepy or get tired, clap 2 times and let's get through this meeting. Thank you. And Raymond, it's all yours.
Hey, had some technical difficulties, guys. Can you hear me? Hello?
Raymond, you come, can you,
Hey, Raymond, we can hear you. We can't see you.
Yeah, I had to step outside really quick. Just bear with me for 2 seconds.
Oh, okay. Well, come on back. Come on back to us.
2 seconds.
While we're waiting for Raymond, did anyone have a need or a want you want to stick in the chat?
There he is. Oh,
Oh, Raymond,
Hello,
while you're getting ready, we have one person who answered the question, and that was Richie. Richie is shining bright tonight, and he said 25%.
25% in today's world, yes. That's probably the sweet spot, anywhere between 20 to 30%. But there are some lenders who can take care of that with 10% or 15, depending upon the credit and the experience. So when it comes to lending and financing, the key in today's environment with the COVID, it's about experience. A lot of lenders are weighing very heavily on experience. That does not mean that you cannot get anything if you do not have experience. It just means that with no experience, expect to be anywhere between 10, 11, 12% interest rate, a down payment of about 25 to 30%, somewhere in that range. Financing is not very difficult. Rehab money is very inexpensive in comparison to acquisition dollars. If you have the ability to leverage your own capital, so to speak, 401k, secured loan, anything like that to acquire the property from an acquisition perspective, we can always, as a lending, we can give you the money back, up to 80%, and then turn around and give you the rehab money. So it's, again, the cost factor, it's a lot cheaper to get rehab dollars. On average, if you would borrow $100,000 of rehab money, it's going to probably cost you $8,000 maybe in closing costs, 6 to 8, depending upon the points. So it behooves you, if you can purchase it outright. But if not, I mean, no issues.
So you will fund 100% of rehab costs?
We will, absolutely, 100% of rehab costs. I can go as high as 90% of the acquisition, but again, that's on a case by case. It's depending upon the person's experience, their credit score. But on average, you're looking at about 75%, 80%, something like that. From a one to 4 unit, going into commercial is probably a little bit high. If you wanted like a small cap commercial building, 5, 6, 7, 8, 9, 10, anything like that, it'll be a little bit more, probably like 30, 35%. But only in the COVID. If this was January, I can guarantee you I can get you 10%.
Do we have any more questions? Anybody got a question for Raymond?
I'm gonna unmute everybody or let you all unmute if you want to talk.
Okay. What type of documentation do you require, Raymond? If somebody's, I mean, I'm assuming you have a standard application, but then what are you as an underwriter or as a lender gonna want to see from, especially our newer investors? If somebody's only got, you know, one or two properties under their belt and stuff, what exactly would you want to see from them as far as documentation? What would
Sure,
you?
and across the board, it's going to be pretty standard. You're looking at no tax returns, no W-2, nothing like that. We're going to need all of your business entity documents. We'll need a credit report that typically the lender will run. We'll need the last 2 months of either banking statements or your personal statements, just to make sure that you have the funds to close. And then we just need title information and insurance information. Sometimes people forget about those things, but those things can hold up the process if you don't, start them soon enough. So it just behooves everybody to at least, try to bring that to the table if they can. I mean, if they can't, it's not a problem. Most lenders, they work with title companies and insurance companies so they can recommend, but for the most part, if you have your own, it just speeds up the process. And that's pretty much it. It's a waiting game. It's all about the appraisers. Oh, and your contractor. The big thing is your contractor. Making sure that your contractor has the scope of work or the construction budget. You want to take care of that as soon as possible, because we can't do the appraisal until we have that construction budget, because the appraisal is going to be a subject to as opposed to an as is. So that subject to, they need your scope of work in order to do the walkthrough.
Got you.
Are the loans that you make, are they primarily for rehab?
I can do acquisitions, just straight acquisitions. I can do rehabs. I can do, cross collateral if you have, a property, you don't maybe have the cash, you want to cross collateral it with another, to make the difference. Yeah, we can do some creative things. I say a lot of times deal structure is a good piece that I bring to the table, because if the seller is willing to play, you can pretty much make any deal work. Sometimes the seller doesn't really want to do certain things, so then that sometimes kills the deal, especially if you're looking at creative financing. But if the seller is willing to dance a little bit, we can get a lot of things done.
You mentioned it.
I'm about to
Sorry.
say. Go ahead, Richard.
I can fire off plenty of questions if I'm allowed to, but you mentioned LLC, right? Do you recommend that investors go and form their LLC before getting a house under contract and coming to you for money?
So there's a lot of different ways, and people go back and forth on, do I buy it in my name? Do I, because in comparison, you keep and I'm a licensed residential and commercial mortgage broker, right? So I have my license to do regular LO mortgages across 50 states. So in comparison, you can't compare apples to apples because those are not apples to apples. One's like an apple and one's like a tangerine, right? So you really can't compare the two. So the theory is though, if you have the credit and you have the income and you have that, if you can buy the property through, conventional, I would do that because ultimately that's going to be the least inexpensive way to acquire the property. But the liability is going to be solely on you. And the biggest thing that I'm about is liability. You don't want an issue where somebody on purpose does something and now you're stuck and they can come after everything you have. So to eliminate that, you want to have an LLC. But when you go into that LLC, it's a commercial loan. So it's automatically going to be, the interest is going to be a little bit higher. The down payment is going to be a little bit higher. It's just automatic. But that's, in my opinion, that's, an expense of having an LLC. It's not like a negative thing.
I was just about to say, Raymond, can you break it down? Because this is why everybody's on this call are investors. And some is not going, they don't understand what you mean by acquisition. Can you break that down, what that means when you say acquisition? For number two, also, you guys, I do want to put in a helpful tip. When he says getting conventional loans, he's talking about maybe doing the BRRRR strategy, buy, rehab, refinance, and then of course you already know repeat. So I do want to make sure you guys are aware of this, but also go into the different types of funding, the different types, because if you're trying to do private money lending, you do have to have an LLC in order to get your funding. What he's referring to, you can get funding if you don't have an LLC. If you're an individual that say, hey, my next door neighbor want me to buy their house, they about to move out, and your credit is good, and you might got some money in your retirement plan that's just sitting there, and you wanting to buy that house, he's just trying to basically give you guys the information saying that you don't have to be afraid of thinking that your money is going to be stuck there. You can refi it, but that's going into the BRRRR strategy. However, you already know that there's hard money lenders, private money lenders, and then different other types of lending that goes so on and so on. Can you break it down a little bit more? Because a lot of these, everybody up here are investors. Some are doing deals. Majority of them are doing wholesale. Some are buying whole, and some are fix and flip. So of course, and some don't have any money at all. So give them more options on what they'll have for funding. And then two, break down what is the acquisition. What do you mean by that?
Yeah. So acquisition is just strictly if you
scope of work. How do they get that? Break that down too.
So from an acquisition, that's just a property, that you see, whether you want to flip it or whether you want to keep it as a long-term rental, but you don't necessarily want to put any rehab into it right now, or maybe it doesn't need any rehab right now. You can just acquire the property from a short-term bridge perspective. The lender will allow you to buy that property just as it is, and they'll finance that property, that purchase for you. And it'll be a short term, probably like 12 months. And it allows you to secure the asset. And then, because it's all about securing the asset. Once you secure the asset, then you can kind of do whatever you want, either flip it, wholesale, or whatever. There's a lot of different exit strategies you can do once you acquire the asset. So that's really basically what that is. There's a lot, it's infinite choices when it comes to real estate and what you can do and what you can't do. It's just so many. You can, like I said, do the BRRRR method. It's so many. But as far as breaking it down, if you're an investor, I would realistically say that you probably need a minimum of $15,000 or $20,000. But there are pockets where that's not the case. That's not the norm. But generally speaking, you need to have at least that amount of money to invest, because there's going to be down payment, there's going to be closing costs, there's going to be those type of things. You got to pay the taxes, got to pay the insurance. So you got to factor into that. But there are certain markets and certain properties like trailer homes where you don't need to have all of that money up front. Same thing with modular homes. You may not necessarily need that when you're buying a prefab home that's built on a controlled factory. So But that would definitely be, you know, one thing you want to make sure. If you have, you know, maybe you are a person who has, you know, a little bit of capital, but your credit is outstanding. You may want to do a joint venture, partner with somebody who has cash, but maybe their credit's not the best, right? You can form your LLC. One person is above 80% and one person is below 20%. The lenders are not looking for someone who's under 20% from a underwriting perspective. So you could have a 400 credit score, but being 18% ownership of an LLC, and you bring all the cash, and you can make that transaction works, no problem. They won't even look at you. So and you'll get credit for it because you're on the entity documentation. Again, I say kind of, you know, if the seller is willing to dance a little bit, there's a lot of things you can do. There's seller's concessions, you know, 6%. There's seller's assist. People don't really know that. There's two: seller's concession and assist. A seller's concession is when the seller concedes to give you money to fix something, and a seller's assist is when the seller assists you on the down payment. So you can actually take advantage of both of those to utilize, you know, when acquiring real estate. There's also deferred maintenance. There's another way that you can potentially get some money back. If there's, you know, a property and it has, you know, some work that needs to be done, but you may not necessarily want to do the rehab, you can say, hey, you know, I'll buy that property for X amount of dollars, but you give me you give me a deferred maintenance on that property of $10,000 or $15,000, and at closing, that money comes to you from escrow. So a lot of different ways to skin that cat, like we heard earlier today. Anything specific that I'm missing that you want me to break down more, Roxana?
Yeah, keep going on. You can never give out more information. I would say still walk them through. Like a lot of individuals may not understand that draws process.
Okay, yeah.
Once they send over the sheets, what's the requirement towards them getting the draws?
Yeah,
How does
okay.
that work? Is there's
Yeah.
a fees associated with it?
Yeah.
What's
That's
the
a
delay
good point.
there forcing them not getting approved, forcing them actually getting their money out?
That's a good point. So when it comes to the draw schedule from the rehab, typically the lenders are not, you know, post 2010 or pre 2010, you could get funds up front. But you know, a lot of things happened, so that kind of died out as far as from a lending perspective. So they do the draws. Basically, they're only going to lend you according to your draw schedule and how you have it written out. So you really want to follow that to the letter. They're only going to give you the phase one or the phase two or the phase three. They're not going to give it to you in any kind of random order. So you want to kind of keep it as orderly, in an orderly fashion as possible. They're only going to give you what you can show receipts for. And on top of that, 9 out of 10 lenders are going to charge you a draw fee. And that's because there is a person that typically comes out and they inspect what they expect. And so they're going to check to make sure that what you say you did. And then that's normally what that fee is for. And they turn around and they'll, you know, call home office and then they'll let the funds come to you via wire. That's a good pickup.
Do you have a maximum number of draws you allow over the life of the project, Raymond?
No, there really isn't a maximum. I would just say it gets costly, right? So at $200 a pop, you know, I'd probably try to keep my draws to 3, maybe 4. I mean, depending upon the project. I mean, if it's a huge project, yeah, but I mean, I try to keep it at least like 3, 4, no more than that. That's almost $1,000 just on draw, right?
Yeah, I understand they're costly. Some lenders will limit you as to the number of draws you can.
There's something called a soft cost. People don't realize about that too on your construction budget. You can actually add in things like, for example, paying the draw schedule. That's a cost. It's an expense. You can add it into your soft cost. You can add in your plans and your permits and your specs, and you can add in the appraisal. You can add in a host of different things that you have to come out of your pocket for onto your soft cost, and you can get that money back. But again, that just increases your rehab budget a little bit. But again, it's money that you spent out that you have to account for, and you can get that money back. Some people don't realize that. They don't really know what that is. So you definitely can do that. Most budgets have a line item for soft cost.
Mhm.
So you can always add that stuff into your soft cost. The one thing you can't do is you can't do like taxes, and you can't do like your mortgage payment, right? They won't let you do that. Otherwise, you basically have it for free, right?
Free.
But people
That
do that.
works.
So they do, believe it or not, they know that, okay, if my rehab budget is $80,000, but my contractor told me we can get it done for like 60. So you know that you got that $20,000. You just keep it going, and then when that money comes to you, then you just pay yourself back for paying the monthly
You did
monthly
upfront.
bill, right? So
Mhm.
there's ways around. There's always a workaround.
Yes, and Raymond, so let me ask you this. Is there different options for those, a lot of individuals a lot of people, we hear this on a day-to-day basis that I want to invest into real estate. I want to invest into real estate. And a lot of them say, well, I don't even have no money. And then the next thing is some people say, well, I don't have any credit. What are the different options that's out there for those who do have lower credit scores? What different recommendations that when you send these applications, what's being looked at for as in investors?
Yep. So there are options for individuals who have lower credit scores. There are, just like in anything, in buildings, there's an A, B, C, D building. In lending, there are A lenders, B lenders, C lenders, and D lenders. And so some of those lenders, maybe not an A or a B, but a C lender, they don't really care about, credit too tough. Maybe they have a minimum credit score of 500, but you're going to pay for it, right? So the interest rate's going to probably be 14, 15%. You're going to probably have like 5 points. But in retrospect, somebody says, well, 15% is a lot. In hindsight, it's 1.3% per month. And if your project is only going to take you 5 months, then you really only paid like 6%, 7%, right? So it's always about managing your process, managing the expectations. I say it again, inspect what you expect. If you don't manage that construction piece, which is a huge piece, most lenders will tell you most deals die in the construction part, not acquisition, not anything, because sometimes it just, when you get into a project, there's a whole bunch of other stuff that just happens, and you're not weren't prepared for that. So I would say,
So, but let me ask you this: what type? When you say different lenders, A, B, C, and D in grade, are you referring to hard money lenders, private money lenders, conventional? What do you mean by that? Or
gotcha.
was in their options?
Gotcha. So in an ideal world, private money lenders are probably the best type of lender, just because they give you all the benefits and none of the kind of recourse. What I was referring to when I say A, B, C lenders, those are just lending institutions, companies like Civic Financial, companies like Lima One Capital, companies like Do Hard Money. There's infinite databases out there on the lenders. So that's what I mean. And certain lenders, they have certain restrictions, and there's hard money lenders, and then there's true hard money lenders. And when you get into that C category and that D category, those are true hard money, 100% asset-based lending. They're not looking really too much at your credit, looking at the asset itself and if the deal makes sense. But they're quick and they're really stern on their rules. 15%, 60% interest rate. I've seen some 18%. I have a lender that can do, $25,000 loans, but they tell you up front it's 17% interest rate, it's 6 points, and the loan is going to be for 6 months. So, but those type of, if you have a project that's at that low and you need it, and you know it's only going to take you 90 days to be done, you'll be in and out in no time. So it's all about, expectation.
And let me ask you this, because I know a lot of people probably ask these questions to you, and they probably even ask a lot of these questions to the board members. What is the difference between a broker and a lender? And then the second part of that question is, what's the benefit with working with a broker versus then going with the lender directly?
Got you. So the broker versus the lender. So myself being a licensed broker, I am way back when, in around 2010, when I was the vice president for the bank, I took a literal test, about a 4-hour test to get licensed to do commercial lending, which means anything that's more than five units, or anything that's 1 to 4 that's being done in the LLC. So the difference between using a broker versus going to the lender direct, you're only going to have one option when you get to the lender. The lender's going to say, this is what we can do. That's it. If you use a broker, someone like myself, I'm going to have a standard unified form that allows me to go to multiple lenders without pulling your credit to get a quote to tell you what you qualify for, what you don't qualify for. This way you have options before you make your decision. It's always about having the best options, because sometimes the quickest yes is not always the best yes.
That was a good question, you guys.
Mhm.
And then I think another question would be on the application. When is a good time to fill out the application, before or after we get a deal?
So it depends, right? So if you want to get a pre-approval or pre-qualification, yes, do the application. It lets you know what you can actually buy, which again puts you in the right frame. You're not thinking that I can, buy a $200,000 property when you can only buy a $75,000 property, keeping it streamlined. But the best time to get the loan is when you go into contract. The day you sign the contract is the day you need to be on the phone with your lender, getting that process started. Because what it says on the purchase agreement, that is what the lender is going to go by. And so sometimes the process, you might sign the contract and then, a week goes by and then you go get your funding and now you've already lost a week. And so now you're going to have to look for an extension, as opposed to just doing it from the very, very beginning. We could, meet most deadlines. Most deadlines can be met in 30 days for the most part. Even with COVID, we still are running about 25 to 30, 32, 33 days. So we're still, kind of on two.
Awesome. Do anybody have any questions in the chat? Please let us know if there's anything that he actually said that you didn't understand. I know it's a lot of information. Or if there's anything that he didn't cover the reason why you joined this meeting, that you might have questions, please feel free to ask. We are here.
So
Raymond?
he's asking, is it even possible to do a no money down deal when financing the first mortgage? For example, what if a seller will finance the down payment without a second position lien? The banks will all say you must have skin in the game.
That is correct. I mean, would you give somebody something for nothing? Then that's how the lenders look at it. But that being said, if you're looking to, the deal has to make sense. If you're a new investor and you're looking to buy property at 100% financing, we know you do not know what you're doing. We know that. So there's no way that we're going to give you all this money to then turn around and mess it up, and then we got to take the property back, because that's not like the banks. That is not what we want. We do not want to take them. We do not want to take property back. We don't make money by doing that. We make money by lending it out. So we want to lend it out on good deals. If you are buying a property at 40 cents on the dollar, that's a pretty good deal, right? The lender knows that they can turn around and sell it for 60 cents or 70 cents and they'll make their money back. So that's a pretty good deal, right? The lender's they're gonna really entertain that idea. But if your margins are at 65%, the lender's going to look at you like, no, because A, you don't know what you're doing. B, the margins are too thin. It's a too small thin of an error for something to go wrong. So not going to even entertain that idea. I caution everybody on doing like deals with no money down. Again, there's situations where it can work. For example, if you're buying a property from somebody who is willing to do an owner finance, where the owner becomes the bank and they are financing it to you, then that's something that can be done. But a lot of times, think about it. Why would an owner give you owner financing? Like, what incentives? What's his reasoning for doing that? Like, most people don't do anything for free. So I would also caution that, because then I'm thinking to myself, is there something wrong with the property that I don't know about? Because now I'm going to be on the hook for that note. So, but again, 100% financing can work. I tell you how it really, really works is when you're doing like larger transactions, like you're doing a commercial property for 100 units, and the net NOI is maybe $1 million. And so the money that the property is making can cover the mortgage. Now that's a possibility because it's already debt servicing. There's no guessing. They can look at the numbers and see that the property is debt servicing. So the lender may take a chance because it's debt servicing itself, right? So there's no loss if they lend you the money because it's already making money.
Hey, Raymond, if
Yes.
he wanted to go ahead and contact a broker and go through the pre-approval process, like you said earlier, to gain an understanding of what they would be approved for,
Mhm.
what are the documents that they should pull together in advance of that meeting?
Standard documents. You're going to need copies of your ID. You're going to need copies of all of your entity documents. Every single document that you got to form your LLC, your S Corp, your C Corp, your non-for-profit, we want it all. And then we're going to need the last 2 months of your bank statements just showing how much assets you have. All the assets you have, total amount. Doesn't matter, 401k, bank, money in the bank, doesn't matter. We want it all so that we can kind of qualify you on the highest number. And that's really it. And they're going to ask you about your experience and your credit rating, your credit rating. So, but other than that, that's really like the ground things that you really need to kind of get a pre-approval. And kind of not necessarily a scenario, but a scenario would be nice, but you don't need one. With those 3 things, you can get approvals for no problem.
Okay.
I think that's great. I don't know if anybody.
Yes. Anybody else have any questions?
Go on and shout them out if you got one.
How hard is it to get money for investing in mobile homes? That's from Sheila Hatcher.
Oh, yes, a lot. That's one of the main questions I hear every day too. Yes, that's a good one.
That's going to be, I know Roxana has some experience with that. So mobile home, so there has to be a price point, right? So because you can get mobile homes for $500 all the way up to, to 200,000, right? It just depends on what you're doing. So just that's a kind of a loaded question. You need to be more specific on what.
Well, let me ask you these questions. Okay, so for first question is for mobile homes, do you guys or is a lender that will lend for mobile homes? What's the requirements when they do? Meaning, do land needs to be attached? Do they need to already own the land and then they can put the mobile home there? Or maybe is there a loan where the land can be bought, or do they need to pay for the land? Because usually with mobile homes, it's a package deal in most cases with the manufacturer.
The land and the land and the property itself. So yes, ideally, those two would be the best scenario. But you could buy a mobile home and then just drop it on another lot. You could do that as well too. Again, it's really about the price point of the mobile home, just because lending, they look at, if you don't brick it up and put a foundation on it, they look at it as something that can drive away, it potentially can be moved. And so that scares them a lot. That scares.
I'm sorry, thought you were done.
Mhm.
Let's say a mobile home bricked in, salt, on a permanent foundation on a half-acre lot. What are we looking at? Really,
Yeah,
a
something
really
like,
nice mobile home, a really nice with
yeah,
the
a really
fireplace.
nice one. Yeah, and I'm talking about like a triple wide. It's really decked out. That's nice. You could probably find financing. You could probably find a traditional, maybe not an FHA product, but more, but like a conventional product. You could probably find a conventional product or something like that. Modular homes are also a big thing. But modular homes they're stick built. They're just built inside a factory. So that's an easier palatable thing as opposed to the mobile homes. But there are lenders out there that can finance mobile homes. I have a database of literally over 10,000 lenders. It's actually closer to like 40,000. So it's easy for me to kind of plug and play, so to speak. If I don't know off the top of my head, just tell me the area. I can kind of plug and play and put into the area. Now I can pop up whether or not there's lending for it in that particular area. And it's also too rural versus urban. That's a big issue for lenders. They really want, populations more than 20,000. They don't really want it under 20. So that plays a little bit of a factor into it.
Alrighty. Well, I'm not seeing any more questions. We're about out of time here, but what a bunch of really good information. Have we got your contact, Roxana? Can you maybe put that in the chat?
Yeah, in case anyone wants to get a hold of you. Or can you say it, Raymond?
Yeah. I can be reached at Raymond Dingle LLC at gmail.com, or my company, which is Ray or R Dingle at gemstarcapital.net.
GEMS
Yep, GEM, yep, Gemstar, yep.
capital.net.
And my cell number is the best way to reach me. 484-250-3602. I'm pretty good at, responding. If I don't answer, I typically text message back and forth. Something I picked up when I was in the military. So I like to just respond back to people. Like, I try really hard. I don't like not responding to people. That's the other American enterprise. That's my residential piece too. Like I said, so I can do both. I can do residential and commercial too. So either or works 100%. Yeah, Roxanne has my info right there. That's the best way to really reach me. Text me. Like I said, if you want to get a quicker response, a text message is probably the quickest way to respond. But again, I have no problem talking, like, at all.
Cool. All right.
And I have no problem helping with deal structure too. Like, I have no problem at all trying to help, structure deals, trying to just make it work.
You got a lot of patience.
Yeah. Okay, if everybody's good with questions and stuff, we've gotten a lot of really good information from Raymond, that's for sure. And you can pull his contact information out of the chat, which is always. When you get any type of contact information for anybody, write it down, because you never know. Write it down in your Rolodex or in your little black book or your CRM or the Excel spreadsheet. That'd be me, Excel
Take a
spreadsheet.
picture of it.
Yeah, or take a picture of it. Yeah, so it's always with you. But other than that, I think, are we good, Miss Roxana?
Yes, we are. Thank you guys for tuning in. Make sure you go inside of the group tonight and just post 1 or 2 things that you learned. And also just say hello to us, and we can just finish having this conversation over on Facebook.
That's correct. Always on Facebook. Everybody's on Facebook. Everybody and their dog's on Facebook. There's a lot of dogs on Facebook. Anybody notice that? I mean, there's a lot of dogs with their own darn Facebook pages. What is up with that?
Yes.
Anyway, thank you everybody for joining in. Thanks to Raymond for spending some time with us down here in chilly Raleigh, because it's going to get chilly tonight, people. If you got some plants you need to take in, you better take them in, because it's going down to like 30 something tonight, I think.
Mm.
Yuck. Yuck. And we're supposed to be in the South. South is supposed to be warm. I'm sorry. I don't like this. But anyway, everybody have a good evening. Stay safe.
Good evening.
Thanks, Raymond. Thanks,
No
Roxanne.
problem.
Richie for,
And Richie, yep. Thanks, Richie.
Night, everyone.
night, everyone. Night, John.
Good night.
Night, John Boy.